Assalamualaikum warahmatullahi wabarakatuh. Assalamualaikum warahmatullahi wabarakatuh. Hi everyone. We are from Group 2 of Auditing 2 class. We are here to present the materials about the completing the audit objective. We're gonna explain to you about the material briefly so you can understand the material better. But first, I need to introduce our group members. First, we have Bunga Adinda Putri. Second, we have me, Sini Nabila Andri. And then last but not least, we have Gina Maria Harun. Our presentation consists of 4 parts. The first is design and perform audit tests. The second is a review for content and liabilities and commitments. Third is inquiry of clients' attorneys. And then fourth is the type of subsequent event. Okay, the presentation will be carried by Bunga Adinda after this. So Bunga, time is yours.
Okay, thank you, Cindy. So the first one, we talk about design and perform audit tasks related to presentation and disclosure audit objective. So as a part of phase 4 of the audit, auditors evaluate evidence they obtain during the first 3 phases of the audit to determine whether they should perform additional procedures for presentation and disclosure related objective. Auditors' approach obtaining evidence for presentation and disclosure objectives consistent with how they approach obtaining evidence for transaction related and balance related objective. So we have the presentation and disclosure audit objective. As you can see in the table 24. So the activities that auditors do in this phase is, the first one is evaluate evidence obtained during the first 3 phases of the audit to assess whether additional evidence is needed for the presentation and disclosure objective. And then evaluate whether the overall presentation of the financial statements and related footnotes complies with accounting standard. Concern related to this matter is determining whether management has disclosed all required information. And then the second one is review for contingent liabilities and commitments. A contingent liability is a potential future obligation to an outside party for an unknown amount resulting from activities that have already taken place. Material contingent liabilities must be disclosed in the footnotes. 3 conditions are required for a contingent liability to exist. Is the first one, there is a potential future payment to an outside party or the impairment of an asset that resulted from an existing condition. The second one is that there is uncertainty about the amount of the future payment or impairment. And the last one is the outcome will be resolved by some future events or events. For the example is a lawsuit that has been filed but not yet resolved meets all the 3 conditions. Next slide. Accounting standard use 2 primary approach in dealing with uncertainty in loss contingencies. The first measures to contingency using a fair value approach. The second approach uses a probability threshold. With the probability threshold, the standards describe 3 levels of likelihood of occurrence, or ranging from remote to probable, and the appropriate financial statement treatment for each likelihood. Auditors are especially concerned about certain contingent liabilities. The first one is pending litigation for patent infringement, product liability, or other action, and then income tax disputes, and then product warranties, and then notes receivable discounted, and then guarantees of obligation of others, and the last one is unused balances of outstanding letters of credit.
Okay, so the next part of the presentation will be presented by Gina Maria Harun. Gina, time is yours.
Okay, I will present this slide and the next slide. The most important characteristic of commitment is the agreement to commit the firm a set of fixed conditions in the future, regardless of what happens to profits or the economy as a whole. Audit procedures for contingencies. The first step in the audit of contingencies is to determine whether any contingencies exist, a current presentation, and disclosure objective. As you know from studying other audit areas, it is more difficult to discover unrecorded transactions or even than to verify recorded information. Once the auditor knows that the contingencies exist, evaluating their materiality and the footnote disclosures can ordinarily be satisfactorily resolved. The following are some of the procedures commonly used to search for contingent liabilities, but not all are applicable to every audit. First, inquire of management orally and writing about the possibility of unrecorded contingencies. Next, about review current the previous year's Internal Revenue Agent reports for income tax settlements. And the third is review the minutes of directors and stockholders meeting for indicators of losses or other contingencies. Next is analyze legal expense for the period under audit and review invoice and settlements statements for legal counsel for indication of contingent liabilities, especially lawsuit and pending tax assessment. Next, obtain a letter from each major attorney performing legal service for the client as to the status of pending litigation for other contingent liabilities. Next is review audit documentation for any information that may indicate a potential contingency, and then examine the letters of credit in the first as the balance sheet that and obtain the confirmation of the used and unused balances. Evaluation of non-contingent liabilities. If auditor concludes that there are contingent liabilities, they must evaluate the significance of the potential liability and the nature of disclosure needed in the financial statement to obtain evidence about the occurrence and rights and obligation presentation to disclosure objective. Audit procedures for finding commitments. The search for unknown commitments is usually performed as a part of the test in each audit area. For example, in verifying sales transaction, the auditor should be alert for sales commitments. Similarly, the commitments for the purchase of raw materials or equipment can be identified as a part of audit of each these accounts. The auditor should also be aware of the possibility of commitments when reading minutes, contracts, and correspondence files. Next topic is about inquiry of clients' attorneys. Obtain and evaluate the letters from the client attorneys. Inquiry of the client's attorneys is a major procedure that auditors rely on for evaluating, re-evaluating non-litigation or other claims against the client and identifying additional ones. The auditor relies on the attorney's expertise and knowledge of the client's legal affairs to provide professional opinion about the expected outcome of existing lawsuit and the likely amount of the liability, including court costs. The standard inquiry to the client's attorney prepared on the client's letterhead and signed by the company's officials should include the following. First, a list including pending tribunal litigation and asserted of uncertain claims of assessment with which attorney has had significant involvement. Second, request that attorney furnish from information for comments about the progress of each item list. Third, request of the law firm to identify any unlisted pending or tribunal legal action or a settlement that the client list is complete. Fourth, third main of informing the attorney of the attorney's responsibility to inform management of legal matters requiring disclosure in the financial statements and to respond directly to the auditor. And these pictures about the letter, example of a valid letter of the Hillsborough Hardware Company. And If an attorney refuses to provide the auditor with information about material existing lawsuits or certain claims or unasserted claims, auditor must modify their audit report to reflect the lack of available evidence, a scope limitation which require a qualified or disclaimer of opinion.
Okay, I will take my part from here. I will start by presenting about review for subsequent events, which is conducting a post-balance sheet review for subsequent events. The auditor must review transactions and events that occurred after the balance sheet date to determine whether any of these transactions or events affect the fair presentation or disclosure of the current period statements. The auditing procedures required by auditing standards to verify these transactions and events are commonly called the review for subsequent events or post-balance sheet review. Next. Then we came into the last part of our presentation, which is the type of subsequent events. Two types of subsequent events require consideration by management and evaluation by the auditor. First is those that have a direct effect on the financial statements and requires adjustment. Some events that occur after the balance sheet dates provide additional information to management that helps them determine the fair presentation of account balance as of the balance sheet date. Information about those events helps auditors in verifying the balances. Subsequent period events, such as the following, require an adjustment of account balance in the current year's financial statement if the amounts are material. First is the declaration of bankruptcy by a customer with an outstanding account receivable balance because of the customer's deteriorating financial condition. Next is settlement of litigation at an amount different from the amount recorded on the books. And then the disposal of equipment not being used in operation at a price below the current book value. Next. Yeah, the second one is that for those that do not have a direct effect on the financial statements, but for which disclosure may be required. Subsequent events of this event are events that provided evidence about conditions that did not exist at the date of the balance sheets being reported on, but arose after the balance sheet dates and may be significant enough to require disclosure. Example of this type of non-recognized subsequent events include a decline in the market value of securities held for temporary investment or resale. Then next is the issuance of bonds or equity or securities. And next is a decline in market value of inventory as a consequence of government action barring the further sale of a product. Next is the uninsured loss of inventories as a result of fire. And last but not least, a merger or an acquisition. If an auditor determines that the subsequent events have a material effect on the company's internal control over financial reporting, the auditor's report must include an explanatory paragraph either describing the event and its effect or directing the reader to disclosure in management report on internal control of the event and its effect. Okay, I'll continue. The first category of the audit test includes cut-off and valuation tests done as a part of the test of detailed balances. The second category of this test is performed specifically to obtain information to incorporate into the current year's account balance or footnotes as test of the completeness, presentation, and disclosure objective. These tests include the following: review records prepared subsequent to the balance sheet dates. Next is review internal statement prepared subsequent to the balance sheet dates. Next is examine minutes issued subsequent to the balance sheet dates. Next is correspond with attorneys and then inquires of management and also obtain a letter of representation. Next. Next is dual dating. Dual dating is the auditor has two equally acceptable options for expanding subsequent event tasks. It is either expand all the subsequent events tasks to the new date or restrict the subsequent events review to matters related to the new subsequent event. For the first option, auditors simply change the audit report date to the new date. For the second option, the auditor issues a dual dated audit report, meaning that the audit report includes two dates. The first date for the completion of audit testing, except for the specific exception, and the second date, which is always a later for the exceptions. Okay, so that is actually the end of our presentation from us, Group 2. I would like to apologize if we made some mistake here and there in the presentation, but I hope that our video and our presentation will help you guys learn and understand more about the materials. And I think that's it. Assalamualaikum warahmatullahi wabarakatuh.